jobless claims at 256,000. That's up 5,000 from, oh my gosh. Boy, not only was I wrong, down 0.9% on first look at second quarter GDP, down 0.9%. Okay, I know there's an organization that decides whether we're in a recession or not, but investors, they're not going to wait. 2 back-to-back negative quarters, it's not good.
This is an inventory glut recession. There's gluts on almost every. There'll be a glut in housing. There's clearly a glut in things that are in retail. We saw that from Best Buy again, confirming Walmart. But we can't find more workers. So at the same time, we need companies to. I don't mean to sound heartless here, to lay off people.
There's clearly a slowdown going on right now. We're probably not yet in a recession, but clearly things are slowing out there.
In terms of what we're seeing in the data, whether it is the GDP number, whether it is the jobless claims number, this is an economy that's weakening at a much faster rate than most people expected. That's the bottom line. Whether we're in a recession or not is not as interesting as the fact that we are weakening really fast. In terms of what does it mean? Well, there were 2 FOMC messages yesterday. There was a scripted message, which was that inflation is much too high, that yes, the economy is weakening, but don't worry about it because the labor market is incredibly tight and we're going to continue tightening. And then there was that unscripted but consequential comment that we are at neutral. So depending on which FOMC message you look at, you get very different conclusions with today's data. I think the bottom line, Andrew, is we're not out of the stagflationary forces yet. Yes, inflation is going to come down at a headline level, but it's not going to come down fast enough given how fast the economy is weakening. And that's going to put the Fed in the same dilemma it's been in for the last few months.
The economic number today in terms of the economy maybe being in a recession with the negative GDP, let's put it in perspective. If we're in a recession, it's going to be a mild recession. And generally, stocks go down about 3 to 6 months before the economy enters a recession, and they start to go up mid-recession. So if we're in a recession, we still think you want to be buying stocks here. There are lots of very solid names out there that are very attractive prices. We like companies like Cisco, Goldman Sachs, Medtronic, Microsoft, all selling at below market multiples, except for the Microsoft, you're paying a little bit more for a great growth company, and they're all down a lot this year.